Question 1. Types of cyber risks and threats. Which of the following best explains why insider threats are particularly challenging for businesses to manage compared to external cyber threats? A. Insider threats often involve malicious intent, which makes them more difficult to detect than external threats. B. Insider threats have direct access to sensitive systems, reducing the effectiveness of traditional perimeter security. C. External threats rely more on social engineering, which insiders are immune to due to their training. D. Businesses prioritize external threats because they perceive them as more common, leaving insider threats unaddressed. Answer B. Explanation. Insider threats are challenging because insiders have legitimate access to systems, bypassing many traditional security measures like firewalls and intrusion detection systems. While some insider threats are malicious, e.g., intentional sabotage or theft, others arise from negligence or human error. Traditional security approaches are less effective against these threats, requiring businesses to implement access controls, monitoring systems, and employee training programs. A is incorrect because not all insider threats involve malicious intent. Accidental breaches are also common. C is incorrect because insiders are not immune to social engineering and they can still be tricked or coerced. D is incorrect because insider threats are not less common and they are often underreported but have significant impacts. Question 2. Scenario-based policy coverage and provisions. Sarah manages a mid-sized retail business in Kentucky. After a ransomware attack, her company paid a ransom of $50,000 to regain access to critical systems. However, the company also faced an additional $30,000 in costs for legal consultations, customer notifications, and public relations to mitigate reputational harm. Sarah is reviewing her cyber insurance policy to understand which costs are covered. Which of the following combinations of coverage would address Sarah's financial losses? A. First-party coverage for ransom payments and notification costs and third-party coverage for legal and reputational harm. B. First-party coverage for business interruption and data recovery and third-party coverage for ransom payments. C. First-party coverage for ransom payments, notification costs and public relations and third-party coverage for legal expenses. D. Third-party coverage for ransom payments and public relations, and first-party coverage for notification costs. Answer C. Explanation. Sarah's financial losses include ransom payments, notification costs, public relations expenses, and legal fees. These are typically addressed as follows. First-party coverage handles direct costs to the business, such as ransom payments, notification costs, and public relations to manage reputational harm. Third-party coverage applies to liability-related expenses, such as legal fees arising from lawsuits or regulatory actions. A is incorrect because reputational harm is covered under first-party coverage. B is incorrect because ransom payments are not typically included under third-party coverage. D is incorrect because ransom payments fall under first-party coverage, not third-party coverage. Question 3. Risk mitigation strategies. Why is it critical for businesses to implement multi-factor authentication (MFA) as a part of their cyber hygiene practices? A. MFA eliminates the risk of insider threats by ensuring only authorized personnel can access sensitive systems. B. MFA significantly reduces the risk of credential theft by requiring additional verification beyond passwords. C. MFA ensures compliance with Kentucky-specific data protection regulations, which mandate its use for all businesses. D. MFA prevents all types of cyber attacks by creating an impenetrable security barrier for businesses. Answer B. Explanation. Multi-factor authentication (MFA) adds an extra layer of security by requiring users to verify their identity through at least two factors, e.g., a password and a one-time code. This reduces the risk of credential theft by making it harder for attackers to gain unauthorized access even if they obtain a user's password. A is incorrect because MFA reduces but does not eliminate insider threats. Insiders can bypass MFA if they have access to the required factors. C is incorrect because there is no explicit Kentucky regulation mandating MFA for all businesses, although it is a best practice. D is incorrect because MFA does not prevent all cyber attacks. It is one of several layers in a comprehensive security strategy. Question 4. Legal and regulatory environment. Under the Kentucky-specific data protection regulations, which of the following actions is most critical for businesses handling personal data to remain compliant after data breach? A. Notifying affected individuals and regulatory authorities promptly. B. Destroying all affected data immediately to prevent further breaches. C. Offering monetary compensation to affected individuals. D. Withholding breach details until legal counsel approves disclosure. Answer A. Explanation. Kentucky regulations aligned with federal standards like the Health Insurance Portability and Accountability Act, HIPAA, and Gramm-Leach-Bliley Act GLBA mandate timely notification to affected individuals and regulatory authorities in the event of a data breach. B is incorrect because destroying data could violate evidence preservation requirements for investigations. C is incorrect because monetary compensation is not a mandated compliance step, although it may be part of settlements. D is incorrect because withholding breach details unnecessarily can result in penalties for non-compliance. Question 5. Emerging trends in cyber insurance. What is one key benefit of integrating blockchain technology into cyber insurance practices? A. Blockchain automates claims settlement through smart contracts, enhancing efficiency and reducing fraud. B. Blockchain eliminates the need for underwriting, simplifying the policy creation process. C. Blockchain ensures complete anonymity of insured parties, protecting their privacy. D. Blockchain prevents all forms of cyber attacks by creating unbreakable digital security. Answer A. Explanation. Blockchain technology offers immutable and transparent records that support efficient claims settlement through smart contracts. These contracts automatically execute actions like payout after predefined conditions are met, reducing administrative delays and fraud risks. B is incorrect because underwriting is still required to assess risks. C is incorrect because blockchain transparency is balanced with privacy features, not complete anonymity. D is incorrect because blockchain enhances security but does not prevent all cyber attacks. Question 6. Scenario-based claims process and management. Tom's Manufacturing Company in Kentucky experiences a data breach exposing 10,000 customer records, including sensitive personal information. His cyber insurance policy includes coverage for regulatory fines and penalties, legal fees, and notification costs. However, the insurer denies part of his claim for failing to follow incident reporting requirements. What step could Tom's company have missed in the claims process? A. Conducting a comprehensive cybersecurity audit after the breach occurred. B. Immediately notifying the insurer about the breach according to policy terms. C. Offering customers free credit monitoring services. D. Seeking pre-approval from the insurer before incurring any breach-related expenses. Answer B. Explanation. Most cyber insurance policies include strict reporting timelines for insured parties to notify their insurer about incidents. Failing to meet these timelines may lead to denial of claims. A is incorrect because audits are beneficial but not usually a claims requirement. C is incorrect because offering credit monitoring is not typically mandatory under claims terms. D is incorrect because pre-approval is needed for specific costs but does not replace the immediate reporting requirement. Question 7. Risk mitigation strategies. Which of the following measures best minimizes the risk of social engineering fraud in businesses? A. Installing firewalls and antivirus software to block phishing emails. B. Conducting regular employee training on recognizing and avoiding social engineering tactics. C. Using complex passwords that are changed frequently. D. Limiting internet access to trusted websites only. Answer B. Explanation. Social engineering fraud often targets human vulnerabilities. Regular training helps employees recognize suspicious requests and phishing tactics, reducing the likelihood of falling victim to fraud. A is incorrect because technical controls alone cannot fully prevent social engineering attacks. C is incorrect because strong passwords are helpful but not sufficient for social engineering prevention. D is incorrect because attackers can exploit trusted channels or offline methods. Question 8. Underwriting cyber insurance. What is the primary reason cyber insurers evaluate a company's incident response plan during the underwriting process? A. To determine the level of financial resources the company can allocate to cyber insurance premiums. B. To assess the company's ability to minimize the impact of potential cyber incidents. C. To evaluate the company's legal compliance with cybersecurity regulations. D. To estimate the likelihood of the company becoming a target for insider threats. Answer B. Explanation. A well-defined incident response plan indicates the company's preparedness to address and mitigate cyber incidents, reducing potential claim severity. Insurers consider this when setting premiums and coverage terms. A is incorrect because financial resources do not directly relate to the incident response plan. C is incorrect because legal compliance is assessed separately from the incident response plan. D is incorrect because incident response plans do not specifically address insider threats alone. Question 9. Policy coverage and provisions. Which of the following would not typically be covered under A cyber insurance policy's business interruption coverage. A. Loss of revenue due to a ransomware attack shutting down operations. B. Expenses incurred to restore business systems after malware infection. C. Profit losses during system downtime caused by a scheduled IT maintenance. D. Loss of income due to a DDoS attack affecting e-commerce sales. Answer C. Explanation. Business interruption coverage applies to unexpected disruptions caused by cyber incidents like ransomware or DDoS attacks. Planned maintenance does not qualify as an insurable event. A is incorrect because ransomware-caused revenue loss is typically covered. B is incorrect because system restoration costs may also be covered under first-party coverage. D is incorrect because income loss due to DDoS attacks falls under business interruption coverage. Question 10. Actuarial considerations in cyber insurance. How does predictive modeling improve the accuracy of cyber insurance premium calculations? A. By incorporating historical claims data to estimate future risks. B. By replacing traditional actuarial methods with machine learning algorithms. C. By predicting the exact timing of cyber attacks. D. By standardizing premiums across industries regardless of risk. Answer A. Explanation. Predictive modeling uses historical data and statistical techniques to estimate the probability and impact of future cyber incidents. This allows insurers to tailor premiums based on individual risk profiles. B is incorrect because predictive modeling complements, not replaces, traditional actuarial methods. C is incorrect because predicting exact timing is not feasible. D is incorrect because premiums vary based on industry-specific risks. Question 11. Cyber risk quantification. Which metric is most commonly used to quantify potential financial losses due to cyber risks? The risk acceptance criteria RAC. B. Annualized loss expectancy L. C. Cybersecurity insurance multiplier SIM. D. Policy liability ratio PIR. Answer B. Explanation. Annualized loss expectancy (AL) combines the estimated frequency of an event in its financial impact, helping organizations quantify potential losses. A is incorrect as RAC refers to thresholds for tolerating risks. C is not a recognized metric. D relates to insurer liability, not risk quantification. Question 12. Coverage exclusions. What is a common exclusion found in cyber insurance policies? A. Losses caused by ransomware attacks. B. Data breaches involving personally identifiable information (PI). C. Regulatory fines due to GDPR violations. D. Cyber incidents resulting from intentional acts by the insured. Answer D. Explanation. Cyber insurance policies often exclude coverage for losses caused by intentional acts, fraud, or criminal activity by the insured. A and B are generally covered under cyber insurance policies. C may be covered depending on the policy, but intentional acts are universally excluded. Question 13. Scenario-based third-party liability. A retailer suffers a cyber attack that exposes its customers' credit card information. The retailer's cyber insurance includes third-party liability coverage. The insurer agrees to pay for lawsuits filed by affected customers but denies coverage for the cost of upgrading the retailer's payment systems post-incident. What is the likely reason for the denial? A. The cyber insurance policy does not cover regulatory penalties. B. Upgrading payment systems is considered a preventive measure, not a claimable expense. C. The third-party liability coverage only applies to physical damages. D. The attack was not reported within the required time frame. Answer B. Explanation. Third-party liability policies cover legal costs and settlements but do not cover preventive upgrades, as these are operational expenses rather than insurable losses. Question 14. Risk control measures. Which of the following best demonstrates a proactive cyber risk control measure? A. Purchasing a high-limit cyber insurance policy. B. Conducting regular penetration testing of IT systems. C. Filing claims immediately after a cyber incident. D. Negotiating exclusions in cyber insurance policies. Answer B. Explanation. Regular penetration testing helps identify and mitigate vulnerabilities before cyber incidents occur, demonstrating a proactive approach to risk control. A and D focus on financial protection rather than prevention. C is a reactive, not proactive measure. Question 15. Regulatory compliance. Under Kentucky law, how long Does an organization have to notify affected individuals after discovering a data breach involving personal information? A. 24 hours. B. 72 hours. C. Without unreasonable delay. D. 30 calendar days. Answer: C. Explanation. Kentucky law requires organizations to notify affected individuals without unreasonable delay, balancing prompt action with thorough investigation. Question 16. Scenario-based. Social engineering fraud. An employee at a logistics firm receives an email that appears to be from their CFO requesting a wire transfer. Believing the email is legitimate, the employee complies, transferring $50,000 to a fraudulent account. What type of cyber insurance coverage would address this loss? A. Business interruption coverage. B. Data breach coverage. C. Social engineering fraud coverage. D. Cyber extortion coverage. Answer: C. Explanation. Social engineering fraud coverage is designed to address losses resulting from deception tactics like phishing or pretexting. Question 17. Emerging risks in cyber insurance. What is one of the most significant emerging risks impacting the cyber insurance market? A. The shift from cloud computing to on-premises servers. B. Increasing use of legacy systems in critical industries. C. The rise of artificial intelligence and its misuse by attackers. D. Decreasing frequency of ransomware attacks. Answer: C. Explanation. The rise of artificial intelligence increases the sophistication of cyber attacks, creating challenges for insurers and insured parties alike. A is incorrect as cloud computing adoption is increasing. B is a challenge but not as significant as AI misuse. D is incorrect as ransomware attacks are on the rise. Question 18. Policy limitations. Which of the following scenarios is least likely to be covered by a standard cyber insurance policy? A. A malware attack shutting down a commerce platform. B. Loss of intellectual property from a cyber intrusion. C. Reputational damage resulting in loss of customers. D. Costs associated with regulatory compliance upgrades. Answer: D. Explanation. Regulatory compliance upgrades are generally considered operational costs, not losses resulting from a covered event. Question 19. Claims handling. What is a crucial step in ensuring a successful cyber insurance claim? A. Delaying incident reporting to investigate thoroughly. B. Collecting evidence and logs of the cyber incident. C. Resolving the issue independently before notifying the insurer. D. Communicating with affected stakeholders before the insurer. Answer: B. Explanation. Collecting evidence is essential for substantiating claims and ensuring the insurer has the required documentation to process the claim. Question 20. Scenario-based. Business interruption. A regional retailer experiences a ransomware attack, forcing it to close its online store for a week. Its cyber insurance policy includes business interruption coverage. What costs are most likely to be reimbursed? A. Ransom payment to the attackers. B. The revenue lost during the week-long closure. C. Upgrades to the retailer's cybersecurity systems. D. Costs of notifying customers about the breach. Answer: B. Explanation. Business interruption coverage reimburses revenue lost due to unexpected operational downtime. A may be covered under cyber extortion coverage but not business interruption. C and D involve separate coverage areas. Question 21. Cyber insurance trends. What trend is significantly impacting the cyber insurance market in recent years? A. Reduced costs for cyber insurance premiums due to increased competition. B. Increased adoption of risk-sharing frameworks between insurers and policyholders. C. A decline in ransomware-related claims. D. Expansion of policies to include intentional acts by the insured. Answer: B. Explanation. Risk-sharing frameworks are becoming more common where policyholders and insurers collaborate to mitigate risks. A is incorrect as premiums are generally rising due to increasing cyber threats. C is inaccurate. Ransomware claims are increasing. D is false as intentional acts are typically excluded. Question 22. Policy tailoring. Which of the following is essential when tailoring a cyber insurance policy to a specific organization? A. Selecting a policy based solely on the lowest premium. B. Focusing only on coverage for ransomware attacks. C. Understanding the organization's unique risk profile and industry-specific threats. D. Avoiding endorsements or riders to keep the policy simple. Answer: C. Explanation. Customizing a policy requires understanding the organization's risks as cyber threats vary by industry size and operations. Question 23. Scenario-based. Vendor risk. A retailer's payment processor is hacked, exposing customer credit card information. The retailer faces lawsuits despite not being directly breached. What type of cyber insurance coverage is most relevant in this case? A. First-party coverage. B. Third-party liability coverage. C. Business interruption coverage. D. Cyber extortion coverage. Answer: B. Explanation. Third-party liability coverage protects against claims from customers or partners due to a vendor's breach impacting the policyholder. Question 24. Legal considerations. What is a primary legal obligation for organizations under data breach notification laws? A. Purchase cyber insurance to offset breach costs. B. Publicly disclose the breach within 24 hours of discovery. C. Notify affected individuals and relevant authorities promptly. D. Guarantee compensation for all affected parties. Answer: C. Explanation. Data breach notification laws require organizations to inform affected parties and regulators without undue delay, ensuring transparency. Question 25. Risk aggregation. What is a significant challenge in managing risk aggregation in the context of cyber insurance? A. Cyber risks are inherently unquantifiable. B. Insurers face difficulty assessing interconnected exposures. C. Policies exclude aggregated risk assessments. D. Insured parties lack compliance with cyber regulations. Answer: B. Explanation. Insurers struggle to manage risks that span multiple organizations, such as supply chain attacks, leading to aggregate exposures. Question 26. Scenario-based. Insider threats. An employee accidentally downloads malware, compromising sensitive company data. The organization's cyber insurance policy includes coverage for employee errors. What coverage is likely applicable in this situation? A. Network security liability. B. Social engineering fraud. C. Business interruption. D. First-party data restoration. Answer: D. Explanation. First-party data restoration coverage addresses costs to recover or restore data lost due to errors or cyber attacks initiated by employees. Question 27. Cyber risk assessment. What is a key component of a comprehensive cyber risk assessment? A. Reviewing the organization's physical security measures. B. Identifying potential data breaches and estimating their financial impact. C. Relying exclusively on historical breach data. D. Focusing only on external threats, ignoring internal risks. Answer: B. Explanation. The thorough cyber risk assessment identifies vulnerabilities, evaluates threats, and quantifies potential financial impacts to guide mitigation strategies. Question 28. Coverage for regulatory fines. Under what condition might a cyber insurance policy cover regulatory fines? A. If the fine exceeds $100,000. B. When explicitly included in the policy terms. C. Only in cases involving accidental breaches. D. If the breach occurred due to third-party negligence. Answer: B. Explanation. Regulatory fines are only covered if the policy explicitly states so. Coverage often depends on specific endorsements or riders. Question 29. Ransomware negotiations. What is an emerging best practice for handling ransomware incidents? A. Always paying the ransom to expedite recovery. B. Negotiating the ransom amount directly without external assistance. C. Engaging professional ransomware negotiators or legal counsel. D. Refusing to report the attack to avoid reputational damage. Answer: C. Explanation. Professional negotiators help handle ransomware incidents effectively, ensuring compliance with legal and ethical standards. Question 30. Insurer requirements. Why do insurers often require policyholders to implement multi-factor authentication? MFA. MFA eliminates all risks of cyber attacks. B. It's a low-cost measure to improve password complexity. C. MFA significantly reduces the likelihood of unauthorized access. D. Insurers receive financial incentives from MFA providers. Answer: C. Explanation. MFA enhances security by adding layers of protection, reducing unauthorized access risks, which benefits both insurers and insured parties.